Right, welcome everybody. Hello, hello, hello. Can you guys hear me okay? Jai, give me a thumbs up if you can hear me. All right, great. Welcome. Thank you everybody for attending on a Saturday. I'm taking this time today when I could be out there looking for deals. I'm going to look for deals with you guys. But thank you for taking your time to commit to learning this education, spending this time with me, and doing this for yourself. The reason I put on these real estate trainings is, threefold, really. There's a few reasons why. Number one, nobody really did this for me. I didn't have anybody who was holding my hand, who was showing me and my partner Matt how to get things done. Typically Saturday mornings, Matt and I, my partner, we were just out there figuring it out, running and gunning, trying to make things happen. But we had nobody to hold our hand and show us what was possible and show us how to accomplish what we were looking to accomplish. So I'm here to do that for you. We're going to spend a couple of hours together today. It's 10 o'clock here in Austin, Texas, and we'll probably go until about noon or so. I'm going to cover a few things, today. But so anyways, that's the first reason is I didn't have anybody doing this for me. So I'm here to do this for you. My goal today is to open up your mind and show you what's possible. There is a lot of things that, I hear some of you guys in here talk on the phone, and I hear you guys tell me, the things that you think are holding you back or the reason why you think this isn't possible for you. And so my goal today is to smash through those, self-doubting beliefs that you might have in your head and show you how this truly is possible. How even if you own zero real estate right now besides your primary residence or something, you can go straight into commercial real estate investing and start generating cash flow, passive income, and wealth for you and your family. Number two reason why I do this is my goal is to get some of you to come work with me. I want to partner with you. I want us to invest together. I want to take some of you to the next level, those who are serious and really want this education and are going to take it all the way through. Aren't just here dabbling, aren't just here to get one piece of information, but really want to go all in on making this a reality for yourself. And number three is we learn a lot together, right? There's power in the network. How many people are here right now? There's how many people, Kat? Can't see. Huh? All right, so there's about 30 of us in here right now, and there's power in this network. If 30 of us decided to partner on a deal together, we have a much bigger chance of getting a deal done than if it was just me and one other person. So y'all should be taking advantage of the network that's in here. There's going to be more people who are joining. There's people who are watching on Facebook and Instagram and YouTube, but they're not going to be able to participate in here like you guys are. But there's power in the network, right? I want to meet some of you. Some of you probably have capital you want to invest. Some of you probably have a deal that I would love. Some of you may want to come and be a beneficial part of our organization, right? So there's power in the network, and I plan on trying to get all of us to do more together. So before we dive in, I want to see here in the chat, this is going to be an interactive live training. Please post your comments in the chat, post your questions in the chat. Y'all should be connecting with each other in the chat. But right now in the chat, post where you're at right now and what market you're interested in investing in. I want to know. Some of you have it in your name like Jai in Vegas. We know where Jai's at. Fort Lauderdale, Florida. All right. Where else? I'm here in Austin, Texas. But the markets we're interested in investing in are Houston, Austin, DFW. We have Oregon, Austin, Texas, Las Vegas. All right, another fellow Vegas. We have Pennsylvania. Where else? Kat, where are you interested in investing in? Houston? All right, good choice. Houston's a great market. Battle Creek, Michigan. We got Milwaukee, Wisconsin, California, College Station, Texas. I think that's what that is. DFW in South Texas. All right, good. So here's the thing. There are great real estate markets all over the United States. We have Nashville, Tennessee, Raleigh, Chapel Hill. I like North Carolina. Tempe, Arizona, Indiana, South Carolina, North Carolina. Steffi, you got to open up to Texas. Texas is a great market that you're not mentioning there. So there's a lot of great real estate markets in the United States. Okay. Typically, we're focused on the southern region. Like Steffi mentioned here, we like Arizona, South Carolina, North Carolina. Missouri's good. We like Texas. We like Florida. Not a big fan of California. Not a big fan of New York. Not a huge fan of Oregon. And if I lived in one of those locations, I would be looking in some of these other areas to invest. You do not have to invest in your backyard. Matter of fact, I own a lot of real estate here in Austin that some I've never even seen. I've driven by it, but some of these deals, I haven't seen in years. Right? You don't need to invest in your backyard because you think you're going to be the one going and fixing all the problems. It's not true. You're going to have a property management company. They're going to manage these assets. And if you live in a location that isn't a great real estate market, you need to open up your mind to go and look in other markets. So we're going to cover some of that today. But today, what we're going to do is, it's hard to cover, a tremendous amount of information in 2 hours, but I'm going to do as much of it as I possibly can. So my main goal is to shatter any self-limiting beliefs that you might have. I'm going to show you how this is possible. I'm going to show you why, if you've been trying this, you might not be successful so far, and how you can be successful buying commercial real estate assets, such as multifamily deals, industrial, retail, etc. I'd probably stay away from office. Storage, another great asset class. So we're going to go through all that. I'm going to show you how to analyze some of these deals. I'm going to pull up some deals live on my computer, share my screen so y'all can see. And I'm going to show you how easy it is to go out right now today, after you get out of this training, locate a deal, start working it, and see it all the way through. And then at the end of this, we're going to take some questions. I'll pull some of you guys up. I'll answer questions in the chat as we go through, but also at the end, I'll bring you up live to ask questions live, and I'll answer your questions towards the end of it. Now, I want you to grab pen and paper. You should be taking notes. I'm going to be giving you raw, uncut information today, and I'm going to easily give you over $1 million worth of value here. All you have to do is take notes, remember the information, and then what you leave here, go apply the information, right? Taking the information and learning the information is not enough. You're going to have to get out of here, go put it into action, and actually apply it to get the value from it. I see someone in here saying, struggling financially, have no money to invest, but extremely motivated. That's great, Stephen. Thank you for being transparent and putting that out here. That's going to be another thing I'll cover slightly today, is how you can do these deals without having your own capital. Okay. You don't have to have $1 million liquid, $5 million liquid, $10 million cash in order to be able to go out and do these deals. But what you do need is, you need the knowledge, you need the education, and you need the know-how to go out into the marketplace, locate a good deal, structure a good deal. That way you can attract the money to this deal to be able to get it done. No one who's doing this at an extremely high level is using their own capital. Okay, doesn't matter if you're us at TR3 Capital, doesn't matter if you are Grant Cardone, doesn't matter if you're BlackRock, doesn't matter who you might be. No one who's doing this at a very high level is using their own money. Everybody who's going out there and doing this at a high level raises capital from other people. Okay, they have partners. The partners bring capital to the deals. The partners own a percentage of the deals. And so these guys and these companies who are doing this at a tremendous level are not using their own money. They raise capital to do these deals. And that means that you should be looking to model your business after them as well, if you have the goal of doing it big. Now, for those of you in here who maybe do have some experience with residential single-family houses, 2 to 4 units, I'll tell you this. Me and my partner, Matt, spent about 5 years buying these deals, okay, using our own capital. We would not go out and raise capital. We wouldn't, bring on partners or anything like that. We'd have partners here and there, but we used our own money from our own businesses, whether it was real estate brokerage, commissions, deals we were doing, flipping houses, wholesaling deals. We would take this capital and we would spend all of it on real estate investments. Now, these real estate investments were not the deals I'm going to talk to you about today. These deals were houses. Matter of fact, the office I'm sitting in right now is one of them. Duplexes, triplexes, quadplexes, even small commercial deals such as like 8 units. And we would go out and we bought a ton of these deals here in Austin, Texas, about 130 doors of the small deals with our own money. Now, we still own those today, and I'll tell you why here in a second. But I want to tell you why you should not repeat what we did, and you should just jump straight to the good stuff. You don't have to go out and start with a single family house. You don't have to go out and buy a duplex. You don't have to buy a triplex and work your way up all the way to commercial real estate investments in these bigger deals. You can jump straight to the good stuff and avoid all the headache and heartache that we went through. We still own all those deals today. We have millions and millions of dollars worth of equity in all these deals. Okay, so it's not like we lost money on them, but these deals do not cash flow no matter what. All right, everybody is here to learn about commercial real estate investing, and everybody gets into real estate investing because they're interested in passive income. They want cash flow, right? Well, cash flow does not come from the small deals, no matter what, unless you own them cash. And if you own it cash, then you're still extremely limited on how fast you can grow because you only have so much cash, right? I was talking to a guy yesterday, matter of fact, and he owns 6 houses. I think he's in his 60s, and he's done this on his own. I'm sure he's taken money here and there, and however he did it over maybe 40 years of buying these 6 houses. And he makes about $100,000 a year passively from these 6 houses. He has probably spent 40 years building that up. He barely has any debt left on him, and that's why he cash flows about $100,000 a year. Now, it took 40 years or so and 6 houses with his own capital to get to that point. Now, good. If that's what you're desiring, and you want to take 40 years to build up enough equity and pay down enough debt to be able to get $100,000 a year passive income from 6 houses, that's great. The 130 doors, the small deals that we own right now, 40 years from now, we'll probably be making, $100,000 plus a month passive income if we held on to them and just continued to pay down the debt. But that is a long time. And right now, they don't cash flow unless we paid off all the debt. There's just not enough meat on the bone. There's not enough income, and there's not enough scale with these small deals in order to pay for all of the expenses that are involved. The maintenance, the vacancy, the property management, the property taxes, the insurance, the repairs, the make-readies and turnover costs. You have to pay a bookkeeper. You have to file your tax returns, and you have to pay your debt. There's just not enough income in a single-family rental, a duplex, or even a quadplex to cover all of those expenses and have enough left over for you to cash flow and retire from just a couple of deals. We have 130 of them, and it's still not enough, okay? And I realized that. A couple of years ago, I said, these deals just aren't cutting it. And the market was really great at the time. It was 2020, 2021. Our properties were increasing in value 40% year over year. So we were making money hand over fist with these small deals. But then the market shifted and it changed. And when the market shifted is when I said, no more of these small deals. We can't buy these anymore. They don't do anything for us. It's also extremely hard to scale. We don't want to stop at 130 houses. We want, $1 billion plus worth of real estate, right? So in order to scale to $1 billion worth of real estate, it's going to be a pain in the ass to do it with these small deals. You don't get the good property managers. You don't get the good loans. You don't get the best tenants. You don't get the best insurance. There's no scale to it whatsoever, okay? And so we stopped buying those deals and we started focusing on the bigger and better assets. And when I talk about bigger and better assets, I'm talking about apartment complexes, RV parks, storage facilities, industrial warehouses, retail shopping centers. These are the things that we started looking for because these are big enough to be able to pay for all of those expenses, pay off the debt. You get the best debt there. There's actually way less risk with commercial real estate investments. It's much easier to get done. It pays way higher returns. And and you get the best of everything, right? You get all of the benefits of real estate investing in commercial real estate investments, and you don't get it in the small stuff. So if you're just starting today, you don't have to start with a house, then a duplex, then a triplex, and a quadplex, and an eightplex, and a 30 unit. You can jump straight to the 30 unit. And I believe that if you're just starting out today, honestly, the smallest you should be looking for is about a 32 unit. The 32 unit is going to be just big enough to be able to cover all of those expenses. It has just enough scale to be able to get a good enough management company. It's going to be able to cover all the vacancies. It's going to be able to cover all the expenses, and you are going to have cash flow on that deal. And it is just big enough in order to scale that deal enough by raising rents to make millions of dollars in a relatively short amount of time. The house that dude I was talking to yesterday that he's owned for 40 years or whatever, and he still rents out, he'll probably never make $1 million on that house. But on a 32 unit, you could easily make $1 million in a couple of years. So we're going to cover that today. I'm going to show you what you need to look for, how you need to look for it, what I look for in deals. We're going to talk about raising capital a little bit. I'm going to break down how to analyze these deals. And at the end of this, I'm going to bring some of you up to ask any questions. All right. Now, before we get into that, Kat, let's go ahead and switch me over to my computer here. Before we get into that, like I mentioned at the beginning of this, my goal is to take a few of you who are serious about this to the next level with me. I'm looking for people who want to partner. I'm looking for people who want to do deals with us. And in order to do that, you need the right education. So this is a special offer that we're making for only the attendees today. It's the Get Started Now offer. You get all these different things right here. You get the One Deal Away Bootcamp General Admission Ticket. This is going to be October 22nd through the 25th. It's a virtual boot camp, and I'm going to hold your hand for 4 days. I'm going to show you how to find a deal, underwrite a deal, analyze a deal. I'm going to personally help you negotiate this deal. I'm going to call the broker and the seller for you, help you negotiate it. I'm going to help you send an offer on the deal. And if you upgrade to the VIP ticket on the 4th day, we'll look at more deals, and I'll also help you structure raising capital. So you get that general admission ticket included in this offer today. You're also going to get access to our 6 commercial real estate investment courses, okay? This is all online. You're going to have lifetime access to this. 6 full courses that are going to cover how to invest in commercial real estate self-paced. You're going to get the commercial real estate investment manual. This manual right here, look at how many pages are in here. You're going to get all of these pages. This is my manual that we use. All of our contracts, our LOI templates, our leases. We have assignment contracts in here, raising capital documents, company agreements, JV agreements. All the contracts and everything that we use for every single deal that we have is going to be included as well. And you're going to get the commercial real estate investing dictionary. The knowledge, the language, all the terms that you need to know in order to go out into the market and start speaking this commercial real estate language. All right, so all this stuff we sell individually for over $14,000. But today, if you take advantage of the Get Started Now offer and you want to take things further with us, we're offering it for only $397. Just go to treuniversity.com/now. Matter of fact, if anybody in here has attended the boot camp, they know that the boot camp alone is worth way more than this offer, and you get the additional bonuses. If you have attended the boot camp, put it in the chat and just tell everybody what your experience was at the boot camp. All right, so let's dive in to why you aren't investing first and foremost. All right, so you're not investing. There was someone in here earlier who was talking about confidence, okay? Confidence is extremely important. If you don't have the confidence, if you don't have the knowledge, if you don't have the certainty, you're not going to go out and do the things that are required to get deals done, right? You're attending this because you feel like you need more knowledge, because you feel like you need more certainty. All right, so this is one of the main reasons why you're not. Is you just don't have the knowledge, you don't have the experience yet, because you haven't maybe attended the right things, you haven't consumed the right information, you haven't listened to the right person, and you haven't gone out and put in the work that's required to develop that muscle and that confidence level or you haven't had someone hold your hand all the way through it, just like I did, But the knowledge and the uncertainty is holding you back, right? When we're uncertain, when we feel like we don't have the right knowledge, we just sit there. It's hard to make a move because we're scared. We don't know what direction to go into. We don't know where to look for deals. We don't know, what types of deals we should be looking for. When we find a deal, we don't know if we have a good deal. If we feel like we might have a good deal, we don't know how to get it all the way done and see it all the way through. The knowledge and the certainty is extremely important, and this is the main thing that's holding you back. So if you realize that and you can admit that, that's good, and we have a good place to start from, and we now know what we need to address and touch on so that we can get that knowledge and that certainty when looking at deals. Number 2 is you don't know where to find deals. You don't know where to look for deals. You don't know where the good deals are. You don't know who to talk to, just like I was just mentioning. You don't know what websites to utilize. And even if you did, there's so many places to find deals, and it is very easy. I'm going to show y'all just how easy it is here in a little bit to find good deals, but you have to know what you're looking at, okay? There's deals everywhere. For anybody who tells you it's hard to find deals and there's no good deals out there and the market's just too tough and there's a ton of competition, there's a few things as to why that person might be saying that. Number 1, they don't know what they're talking about and they've never done it, because anybody who does go out and do deals knows just how many deals are out there and how easy it is to actually get out there and get deals done. I've never met anybody, and my partner Matt likes to say this, I've never met anybody who is putting at least 8 hours of work in every single day looking for deals that says it's hard to find deals. Usually the people who say it's hard to find deals are the ones who don't put in any effort into finding deals, all right? But today I'm going to show you a few sources of where to find some of these deals, all right? But you don't know how to analyze it, right? You don't know how to analyze deals, even if you know where to look for them. Real estate is specifically commercial real estate. For those who don't know, it's valued much differently than residential, okay? Residential houses, duplexes, triplexes, quadplexes are valued based on comparable sales, okay? The house that you're looking to sell today or buy today is valued based on what the house that's next door in similar condition and area, etc., sold for not too long ago. And that's what the value is based on. All right. It doesn't matter what your rent is. It doesn't matter what your expenses are if you're renting it out. The value of that house is based on the comparable sale of another house. That's not how commercial real estate is valued. Commercial real estate is valued based on write this down if you have a pen and paper. Commercial real estate is valued based on the net NOI. NOI stands for net operating income. The net operating income, let's move this a little bit. Where do I need to move to? There we go. The net operating income is the difference between your income and your expenses. I'm going to show you real quick. This is the formula to analyze commercial real estate deals, and you should be writing this down. So first, you have your income. Your income is comprised of a couple of different things. First and foremost, it's comprised of your rental income. All right. So you have your rental income. This is you renting out the units. If it's apartments, it's you renting out the apartments to each individual renter. Could be industrial warehouses and you're renting it out to a business. Same thing with retail or storage or RV or anything like this. Your rental income is the income that comes in from renting out the slots, the units, the apartments, the space to your tenants, right? The next part of your income is other income. Now, this is more prevalent in multifamily, but your other income is things such as late fees, pet rent, non-refundable deposits, application fees, admin fees, NSF fees, etc., is comprised of your other income. Okay? Now, Then you have your operating expenses. So this is your income here. Then you need to subtract out what's called your OpEx. Write this down. OpEx is your operating expenses. Operating expenses are comprised of every expense that's required to operate this deal except for the debt. All right, so this is your property management fees. This is your insurance, your property taxes. This is your maintenance and repairs. This is your salaries that you're paying to the people who are working on site at the properties. This is your lawn care, your porter, everything like that. Make ready expenses, okay? This is all utilities. This is all your operating expenses. OpEx is what it's called. All right, but what it is not subtract as an expense is your debt. All right, so you have your income, okay, minus your OpEx equals your NOI. Your NOI is your net operating income, right? Income minus OpEx equals NOI. Now, like I was talking about a second ago, houses, duplexes, triplexes, quadplexes, everything that's 5 units below, always sells and is valued based on the comparable sale next door. Not an apartment complex, not a 32 unit. A 32 unit sells based on the NOI. Now, because you're buying a business and you're selling a business, and that business is more valuable based on more net operating income that business has. Now, what you would do to figure out what the value is of a apartment complex is you would take this NOI and you would divide it by, let's see if anybody knows the answer. Put it in the chat. To figure out the value, I'm going to take my NOI and I'm going to divide it by what? There you go. Good job, Tony. So I'm going to divide it by my cap rate. Now, my cap rate stands for capitalization rate. This is a metric that certain markets, different asset classes, different conditions, different A, B, C, etc., sell based on in different markets and for different assets. Like for a Class B multifamily deal that's 64 units here in Austin, Texas, likely that's going to have a cap rate of about 5.5 to 6, maybe a little less than 6. But if you can get a 6 cap on a Class B multifamily deal here in Austin, that's a pretty good deal. But typically this can be like 5.5, maybe even 5. Class A here in Austin, Texas multifamily, that's like 4.5. And the lower interest rates go, the lower the cap rates go. Higher interest rates go, maybe the cap rates go up. Sometimes they don't. They didn't go as high as I thought they would during this part of the last cycle. But you take your NOI, you divide it by your cap rate, and that determines your value. It's not what the apartment next door sold for. If your apartment complex operates way more efficiently and produces way more NOI than the apartment complex next door, then your apartment complex, even if it's exactly the same thing, will sell for way more than the one next door will. Okay? Now, there are other formulas, right? I told you a minute ago that a 32-unit apartment complex, you could easily make a couple of $1 million in a couple of years simply by raising the rents and buying a good deal. I'm going to show you real quick how we did this on a RV park that we bought earlier this year right outside of Dallas, Texas. Can you bring me back to shared screen here? All right, so this right here is an RV resort that we bought right outside of Dallas, Texas in May of this year. Now, we bought this with our investors. We did not buy this deal with only our own money. We invested with our investors, but we raised capital to buy this deal. Now, this deal is very nice. As you can see here, it's not your typical RV park that you might imagine. This is very nice. It's a resort. All right. So it's all concrete. It has 109 slots. It has all the amenities, the pool. This is a laundry facility. We have showers that are on their way out there. Palm trees are everywhere, even in Texas, near Dallas. And it is a very nice park. Now, we structured this. There's so many creative ways to do deals. So this deal was a good deal for a few different reasons. But this deal we structured where we bought it on seller financing from the seller. We put about 20% down, give or take. And we raised that capital with our investors and partnered with our investors to buy it together. And we bought it on seller financing terms with 0% interest for 5 years. So every single penny that we pay towards a mortgage payment every single month pays down our principal. 0% interest. It's basically free money that we got and structured with this seller financing deal. So even if this deal did not make a single dollar in cash flow and did not appreciate a single dollar over the entire 5 years that we plan on holding this deal would make over $1.6 million simply by making our mortgage payments. Now, that is a sweet and amazing deal structure. Not every deal is going to be like that, but it is possible to structure deals like this. All right. And for those of you who are in here saying, I don't have any credit, I can't qualify for a loan, I don't have any experience, blah, blah, blah. Like I said, we want to smash through all that stuff today. When we bought this deal with seller financing, guess whose credit got pulled in order to qualify for the loan? Put it in the chat. Kat, what do you think? Whose credit got pulled? No. Who? No. Yeah, nobody's credit got pulled. Yeah, it's seller financing. I didn't have to go fill out a loan application. I didn't have to go get my credit checked. We would have easily qualified for it, but when you structure seller finance deals, you don't have to, right? No credit checks, no appraisal. I didn't have to go fill out a loan application. I didn't have to, go do anything with the bank. You can buy real estate like this with seller financing terms, especially, some of the deals I'm going to show you today, like the 30 to 60 unit multifamily deals or RV parks. You can go buy a lot of these deals with seller financing terms if you know how to negotiate it and if you know how to structure deals. All right. So 20% down, 0% interest seller financing. If we don't make a single dollar in appreciation or cash flow over 5 years, we still make over $1.6 million simply by paying down our debt. But over the first, Kat, put me back up here, por favor. So this is how you calculate how much value you're adding to a deal. Write this equation down as I go through it. It's going to be extremely important. And this is one of the most important factors and equations that we take into consideration when we're buying deals. All right. So, and by the way, if you're interested in investing in deals like this, and if you're interested in, like right now, we're looking at a 224 unit in Houston. We're looking at a 228 unit in the DFW area, 144 unit apartment complex, a 142 unit apartment complex up in DFW. If you're interested in investing in these types of deals with us, go to tr3capital.com/fund3. You're not committing to anything, but fill this out so that we can talk to you, have a conversation set up, and see if it might be a good fit for us to partner on these deals together. But here is the value added formula, okay? The value added formula is your rent increase times your number of units times your occupancy times 12 divided by your cap rate, and that equals the value you just added to the property. Now, like I mentioned, the value for commercial real estate deals is based on the NOI divided by the cap rate, right? Well, that's what we're doing here with the value-added formula, is we are taking the rent increase is value added. That's just additional money to the NOI. When we raise rents on the RV park, it doesn't mean that the expenses are also going to increase. It just means that somebody's paying more rent this month than they were last month. And all we did to accomplish that was send them a piece of paper, and now the amount that they pay every single month is a little bit higher than the last month, right? So when we have 109 units at the RV park and we raise the rents by $100, here's the other thing you need. Okay, this is very simple math. This is all commercial real estate investing is. Very simple math. It's nothing complicated. It's not rocket science. It's not, I don't know, calculus. I barely graduated high school. I didn't go to college. You don't need to be a genius to do this stuff, all right? So what you do need, though, is a calculator. So everybody pull out your calculator, unless you are Rain Man and can do this in your head. So pull out a calculator and do 109 times 100. That equals $10,900 of extra potential income. Now, it's not 100% occupied. There's always some vacancy. So let's multiply that by 0.9. So 10,900 times 0.9, which means that 90% of the residents are still there, gives us $9,800. Now multiply 9810 times 12. And the reason we do that is because it's all based on annual numbers. So 12 months in a year, annualizing this out, that means that it's $117,720. Okay. Now I'm going to take that of additional income that we just added to the NOI there, 117 grand. I'm going to divide that by the cap rate that this asset is valued based on, which is 7%. So take 117,000 and divide it by 0.07. And what does that give you? Put it in the chat. That's right. Property value increase, $1.68 million. And guess how long it took us to achieve a $1.6 million value increase? Put it here so everybody sees it. $1.6 million worth of added value to this RV park within the first 5 days that we owned it. Because the moment we closed on it, we raised the rents by $100 for the following month. And within those 5 days, we created $1.6+ million worth of value simply by raising the rents $100 just to bring them to market rents. So this is how easy it is to go out into deals where you spot the value. You can structure seller financing. You don't have to get your credit checked. You don't have to come up with $1.4 million to buy it. You can raise that capital from investors and take it down and create $1.6 million worth of value literally like that simply by raising the rents on your tenants. All right, let's go back here, Kat. All right, so you don't know how to analyze deals. If you're thinking about what I just did and you're a little lost, it's because you don't know how to analyze the deals, okay? And that's all right. Nobody knows how to analyze deals until they take the time to learn how to analyze deals, until they have somebody who shows them how to analyze deals. So if you need more help analyzing deals, you need to practice. You need to be out there looking at deals every day, underwriting deals, running numbers on deals, or you need to come be a part of the offer that I made to you earlier so that I can personally help you get this knowledge and this confidence so you know how to analyze the deal and know if it's a good deal instantly. And last but not least, the reason you aren't investing is you don't know how to close deals. So it's one thing to have knowledge and certainty. It's one thing to know where to find the deals. It's one thing to know how to analyze deals. Now, let me explain something here because I don't want you to fall into this fallacy, all right? I've met so many people who know how to analyze deals, so they think, right? This right here, this is how you analyze deals. It's super easy, okay? You have some multiplication, division, boom, deal analyzed, all right? And people think just because they know how to run a simple math formula that they know how to analyze deals. And unfortunately, that's not correct. A fifth grader could do this math. And just because you know how to run a simple math formula doesn't mean you know how to analyze deals. And it definitely doesn't mean you know how to close deals. I know a lot of people who sit there and they run this simple math formula all day long, and they feel good about themselves, but they never close any deals because they don't know how to actually get a deal done. There's a big difference between running a simple math formula and knowing how to structure an actual deal, put together the team, put together the resources that are required, go out into a marketplace and actually get a deal closed. All right. Moving on. So where do you find deals? Make sure you're writing all this down. Where do you find deals? There's a few places. Brokers. Look at this handsome guy right here. This is my partner, Matthew. Matthew is a broker. And there's so many commercial real estate brokerages out there. But brokers have the deals. The higher up you go and the more levels you go up into deals you're looking at, the more you're going to be reliant upon brokers, right? A lot of you residential guys and girls in here who are used to cold calling and, calling probate, divorce leads, pre-foreclosures, etc. That doesn't happen with these bigger deals, okay? So the higher up you go, the more levels up you go, the more you're going to be reliant upon relationships with brokers. And there's a lot of brokers out there. Erica mentioned one in the chat, Cushman and Wakefield. There's Marcus and Millichap, Newmark. Start putting them in the chat. Who else we got? We have, CBRE. Did I mention Marcus and Millichap? We have tons of these commercial real estate brokerages out there in your market. They have the listings, they know the sellers, and it's your job to build relationships with them so that they will bring you deals. All right. Nope. See, Christian mentioned EXP. That is incorrect. They're right. They are a broker on the residential side, but no one who's buying commercial real estate deals is buying deals from EXP. All the Keller Williams, the EXPs, the Compasses, these are all residential real estate brokerages. And while they may do stuff in the commercial realm, they're not taken seriously as commercial real estate brokers. The real true commercial real estate brokers are out there only doing commercial real estate deals. They control all the inventory, and EXP will never be a serious player in the commercial real estate space. So brokers are one way that you find deals. All right, another way is investors and partners. How many people are in here now? So, we have all these people in here. All you guys should be connecting with each other. All you guys should be out there looking for deals. All you guys should be looking for partners with each other. And this is where you find more deals, investors and partners. They're out there looking for deals. Like if somebody approached us and said, hey, do you have any deals that maybe aren't big enough for you or maybe don't meet the criteria that you're looking for that you can send our way? We would have a tremendous amount of deals to be able to send to them. Because there's a very small percentage of deals that actually fit our buy box for the deals that we're looking to acquire. And everything else, we just pass on to somebody. We pass it on to people inside of our community, pass it on to people who are in the boot camps and things, who are in our courses. We just pass the deals on to them, right? Because we're not buying them. And they are good deals for somebody. They're just not the deals that we're looking for, right? So you need to be building these relationships with serious investors and partners who are out there closing deals that they can pass on deals that they're passing on for whatever reason. All right, next is software such as CoStar, Crexi. I don't know if CoStar, Crexi, 10X is an auction website, Reonomy. There's a lot of these commercial real estate softwares out there that you can pay for and use. Someone mentioned LoopNet earlier. That is a free version of one of these softwares that you can use. So is Crexi. Crexi has a free version as well, but you can find them online. I'm going to be using Crexi today, and I'm going to show you guys some deals. All right, and then mentorship groups and communities. This is the entrepreneur community. This is our mentorship group. This is where we meet every single week. We have serious people who are qualified, serious about getting deals done, who are showing up on a weekly basis, daily basis, doing deals with each other, doing deals with us and us helping them through it, right? So if you're looking for a serious, environment to be involved in, go find one. I'm sure there's a lot of local real estate meetups. There's a lot of things that are near you that you can take advantage of, but you need to put yourself in the proximity of people who are doing what you're looking to accomplish. Because if you just sit in your room by yourself, or if you go hang out with a bunch of EXP agents, for example, you're not going to do much commercial real estate deals, right? Because that's just not what they do. So you need to go put yourself in the room with people who are doing the things that you want to do. All right, so what do you look for in deals? I'm going to go through what to look for, and then I'm going to pull up Crexi, and I'm going to show you what I would be looking for and how we look for this stuff right here. So number one is location. If it's in a bad location, it's never going to be a good deal. Location is extremely important. You've always heard it. Location, location, location. Location, good locations demand the best tenants. They demand the best rents. They demand the best contractors. They demand the best property managers. They demand the best values. They demand the best debt, etc. But if you go buy deals in bad locations, nobody's going to want it, right? You're going to be very limited on who you're going to get to rent there. You're going to be very limited on who you're going to get to manage it. Lenders aren't going to want to lend there. Nobody's going to want it. And you're going to be stuck with this thing that nobody wants. And it's going to be very hard for you to sell it. And you're not going to be able to get these things done. So location is extremely important, and you should always be focused on a good location. Now, when I say location, I'm not talking about downtown Austin, for example, but the Austin, Texas real estate market is a good location. What's not a good location? Pittsburgh, Texas. Right, Kat? What's not a good location is, give me another one. Huh? Yeah, maybe Detroit. I've heard Detroit has deteriorated. I don't know much about Detroit, but I wouldn't want to invest there. What's not a good location? Probably most cities in California for a few reasons. What's not a good location? Probably some cities in New York. What's not a good location? Tons of cities in Texas. Just because Texas is landlord friendly and a good place to operate a business doesn't mean that every single city in Texas is a good place to invest, because there's tons of bad locations in Texas. But we're focused on the Austin MSA, Houston, Texas. DFW is a huge metroplex of great locations to invest in real estate. And you want to invest in these major metros that are good locations, okay? Next is you're looking for cash flow day one. We were on the phone with a broker yesterday, and we were talking about some deals that they had, and they wanted to sell them for like $50K a door, which was my partner Matt was having the conversation. I was just listening. $50K a door was pretty cheap, but then the numbers were just all jacked up, and I was kind of halfway listening, halfway not, so I didn't hear all the information. But basically, it was so far apart on what they should be getting here and the income that it should be producing that there's just like no way to make this deal work. And it's because they didn't have cash flow. And the broker said it. The broker said, something along the lines of, this deal is not going to cash flow day one for sure. Is that a problem? And, Matt working the deal said, well, not necessarily, depending on, what the deal looks like. But yeah, it's a huge problem. Now, if it's not cash flow day one, but it's cash flow day 10, sure. That's one thing. But if it's not cash flow day one and you're going to lose money for 2 to 3 years, then yeah, it's a bad deal and you should just avoid it. There's tons of deals out there that do cash flow day one, and you can go just secure a great deal today. Avoid the bad ones. But you're looking for deals that cash flow. Now, the houses, the duplexes, the quadplexes, etc., these deals will not cash flow, and that's why you should not look at them. The 8plex, not going to cash flow. The 17 units, it might cash flow a little bit, but most likely you're going to break even. And if it does cash flow a little bit, it's not going to be enough that's substantial enough for you to justify the amount of time and effort that's going to have to go into that deal in order to make it cash flow just a little bit. But the 32 unit plus the 50 unit, the 64 unit, those deals will cash flow. All right. And you're looking for cash flow. This is the whole reason why you're investing in real estate. And do not buy deals where you're going to be losing money. All right. The ability to add value through that formula that we just went through. You don't want to buy a deal where it's already maxed out. You want to buy a deal where you can raise the rents, go into it, increase the value, and make a few $1,000,000 in a couple of years, right? You don't want to buy a deal that's the same value 2 years from now that it is today because you overpaid for it, or you maxed out the value, or it was already maxed out, or it was already stabilized. You're looking for inefficiencies in operations where you can go in, raise the rents, add value to deals, and increase the value of the property. Good debt terms, all right? Never buy a deal where you have to compromise the debt. If you buy deals with bad debt, that is what puts you, that's what makes real estate risky. It really is, buying bad deals that don't qualify for good debt. And when you do that, you put yourself and the deal in a very risky situation. But if you always buy good deals that are in good locations, that have cash flow day one, you can increase the cash flow and add value over time, and you have good debt terms, it's very hard to go wrong buying these real estate deals. A lot of people might be scared. I didn't mention this, but a lot of people might be scared to invest in real estate because it's risky, or they think they're going to lose it all. Or like that guy that I was telling y'all about earlier who owns 6 houses I was talking to yesterday. Took him 40 years to do it. He's 60 plus years old. He told me, I asked him what was holding you back, what was holding him back. And he said, well, I feel like I could lose a lot more in commercial real estate. I feel like I could lose a lot more, of what I put in. It's deeper water and I might drown. And sure, I mean, same thing with residential real estate investments as well. But if he were to go out and go put me back here, Kat. If he were to go out into his marketplace and buy a deal in a good location that cash flow day one that he can add value to and with good debt terms, and if he raised the capital to do it, that $100,000 he's making passively that took him $100 a year, that took him 40 years to get there, to do it with 6 houses, he could accomplish with one single deal, guaranteed. But he's scared because he doesn't know what he's doing, right? All right. How to structure a deal. Let's go into this in a second. I want to pull up Crexi and just kind of show you guys how easy it is to go out there and find deals. All right, so I'm on Crexi right now. This is Crexi.com, Crexi.com. It's a free commercial real estate listing service. And all I did was I went in there. I'm looking in Texas in my filters. Here's my filters right here. I'm looking for things that are listed. We have 32 units to 64 unit apartment complexes. This is only multifamily apartment buildings. And I'm looking in Texas. And here is all of the listings. There's 64 results for things that are listed in Texas right now with these parameters. So we have a 36 unit here in an opportunity zone in San Benito, Texas. Now, San Benito is probably not the best location, but maybe it's okay. We have, this looks like a bunch of duplexes in Far Texas Pass. This is 38 units in Dallas, Texas. This is an interesting deal right here. Someone should be looking up the Gaston Commons. We have 60 units in Dallas, Texas. This one looks like there's some ability to add some value here. Now, I don't know this area of Dallas. Now, look at this. As we go through, we were talking about brokers earlier. The brokers are down here at the bottom of each one of these listings. Oh, we got a lot. So this is KW Commercial. That's like the one time you'll see that. SVN, we got Matthews, the multifamily group. This is Marcus and Millichap. Don't know. Capstone, Gray Steel, GREA, Spirit, whoever that is. We have, don't know who that is. Marcus and Millichap, Partners, Coldwell Banker, again, like one of the only times you'll see that. Friedman, TNT, Gray Steel, Multifamily Group. Let's see here. FIMC, Northmark, GREA. Who else we got? Layer 7, Cover. So anyways, these are Walker and Dunlop. These are the brokers that you want to be looking for, and the brokers that you want to be building relationships with. But let's look at this deal right here. I like the look of this deal. The Gaston Commons. Okay, this is listed with Christopher. He is with the multifamily group. And this is a good looking deal, right? You know, it's not the biggest. Okay, how many units is it? It is 38 units. So it's big enough for one of you guys who are just starting out. But I like the look on the outside, you know. It's a clean looking apartment. Interesting ceiling tiles here. But let's take a look at it. Let's take a look at these units. Pretty good looking units. It looks like they're completely updated. They're nice. They have, you know, quartz countertops, good looking kitchens, updated cabinets, updated, you know, ceiling fans and such. Now, here's the issue with buying it completely updated for a deal like this is you know that you are going to be paying a high price for this because they came in and added the value already to this property, right? So maybe this deal doesn't make sense because all the value has already been added, the rents have already been pushed, and they're wanting you to pay that higher price, but we don't know that. But what you would do when you're coming in and you're looking for a deal like this, let's look. Owner infused 450 grand into CapEx, rent bumps up to 400 units on renovated units. So maybe they haven't done it to all units. Average rents are 300 under market comparables. All right, let's do a, well, Stephen, it looks like there is some upside. Let's do some math here. Based on what I taught you guys earlier, this deal right here, if you could raise the rents $300 on this 38 unit, I want someone to do this math with me here. If you could raise the rents by $300 on this 38 unit deal, I want to see how much value we could add. So walk through it with me. 38 units times 300, pull out your calculators. 38 times 300 is $11,400, okay? Now, multiply that by 12. What does that give you? Gives you $136,000, okay? Now, multiply that by 0.9, which is our occupancy, is $123,000. And I want to divide this by, in Dallas, let's do it by like a 5.5 cap. Divide 123,000 by 0.055. Divided by 0.055 equals $2.2 million worth of value that you would add to this property by raising the rents $300. Now, this is what the broker is telling you. Average rents are $300 under market comparables. Now, someone put in the chat, that's a lot to raise. That's right. You know, are you going to raise this much in 1 year on all the existing tenants and have all the existing tenants stay? Probably not. But could you raise it 125 bucks if it is literally that much below and they can't move anywhere else because you're still the cheapest? Yeah. Could it take you 2 years to do it? Potentially. How fast could you do it? I don't know. You'd need to dive into the deal a little bit more, dive into the market, and run the numbers on it to fully vet it out. But this is all where structuring the deal and knowing your market and all the knowledge that's required is going to come into play when you take this deal all the way through. But I'll tell you this, it is possible to raise rents in Dallas, Texas, especially if this is a good area and the units look like this, because these are nice. Now, who knows, right? But this is what you're looking for, and this is where your knowledge and your certainty and your market knowledge is going to come into play, because you're going to be able to figure this out, and this is what you're looking for within deals, okay? So if this was the case, though, and you were able to raise the rents by $300 over a 2-year period, you'd be creating over $2 million worth of value on this deal, okay? Who here, put it in the chat, put yes in the chat if you would want to make over $2 million on this deal over 2 years simply by raising the rents maybe $150 per year if the market allowed it to. How about you, Kat? Would you want to do that? No, Kat put it in the chat. Yeah, everybody would, right? But this is how simple it is, all right? Simple math. You're finding deals. We randomly found this deal on Crexy, but this is what you're looking for. And there's so many other deals that are just like this. All right, we have another one in Dallas. See how this one looks? It's not as nice as the last one. It's been on the market 95 days. You know, like what is this color on the outside? Green. They don't have any interior pics. I wonder if we can view the OM. Let's see here. All right. Can you hear me, Kat? Oh, these don't look horrible necessarily. They don't look great either. Probably just some good pictures. But laminate countertops, not the best hardwood floors or LVP flooring. But this potentially could be a deal too. 60 units is big enough. It's built in 1961. The occupancy is 97%, which tells me that they have some room to raise rents here. 94 parking spaces, 5 buildings, 2.35 acres. I'd want to verify that this is in a good part of Dallas. But 60 unit garden style, 61. It was recently repainted in 2022. Hopefully they didn't paint it that green in 2022. With a modern, yeah, they did, teal and gray color scheme. I don't know. You guys like that color? Put it in the chat if you like the color. Say yay or nay. Yay or nay. I say nay. I don't like that color. I would have done. Yeah, Shanti says absolutely not. I'm with you. So I don't know why they painted it that, but the property has ample parking. That's true. 36 covered spaces. Those covered spaces, just like I was telling you earlier, in other income, this is ways you generate other income in apartments, right? Who here has rented an apartment complex or rented out a unit in an apartment complex and had to pay for covered parking? Or they had the ability to upcharge you for covered parking, or you paid for valet trash, or you paid for the internet through the apartment complex, or whatever it was, right? These are all ways that you create other income and increase the NOI at these apartment complexes. The debt, the property is being offered free and clear of existing debt. That's fine. So you'd want to run the numbers here. Generating additional income. Yeah, see, $1,300 a month. What are the rents? Did they tell us what the rents are? So this is an OM. All right, for everybody who doesn't know, OM stands for Offering Memorandum. And most of the time it gives you the information that you need. Sometimes it doesn't. Let's see if we can figure out what the rents are. So these average rents at the Landmark are about $1,150, which is below the Cortland. It's above La Madera, and it's above. I don't know. It's towards the upper end on where they're at. Rent comparable matrix. What is it called? The Landmark Apartments. So they're kind of right here in the middle. So they say, $1.53 a square foot, 1150, 98% occupied. That's really high. Maybe they're charging back some of this here. All right, projected income and expenses. So potential market rent, we have other income. This is other income here like we were talking about earlier. Can you make this the big screen and make me the small one so they can see? 1 second, guys. I'm going to try and make this bigger for you. All right, so here we go. All right, so this is the either the current and the pro forma of this for the deal. So here's the other income like I was talking about earlier. Here is all of the operating expenses that I was telling you about at the beginning of this. Repair and maintenance, contract services, personnel, marketing and advertising, leasing commissions, admin expenses, utilities, insurance, taxes, management, and replacement reserves, right? So their NOI is $285,000. That is the gross income minus the operating expenses. Now, these operating expenses are really high compared to the income here. We've got 550 grand of OPEX basically, and about 830 grand of income. That's 66% OPEX percentage. That's really, really high. So that tells me two things. Either A, they're overpaying for all these expenses, or B, their income is extremely low and needs to be raised quite a bit. In Dallas, the OPEX percentage should probably be around like 45%, maybe pushing 50, depending on what it's looking like, but it definitely should not be 66%. So that's a huge red flag, and that's something that I'd want to ask the broker and work through as I'm analyzing this deal. And I'd want to figure out how to either A, get the income up to cover those expenses, bring the OPEX percentage down, or cut some of those expenses to bring the OPEX percentage down. But this is an interesting looking deal. And this is something where it looks like there is some opportunity that you guys should be working. And this is how easy it is to go out and start finding deals. Now, you need to know what you're doing, right? And this is how you structure deals. First thing you're going to do is you're going to call the broker and you're going to ask them all these questions. Just like this, right? First question I would ask is, why did they choose that ugly green color to paint the outside? Just kidding. I wouldn't ask that first, but I'd want to know, possibly. But I'd ask, why is the OPEX so high? Why are they not pushing the rents? Why are they selling? What is going on? Who's managing it? Why did they allow it to get into this condition? Why are they deciding to sell it right now? For those of you who have the 10-minute deal method, I would ask them all of my deal requirements. I'm trying to figure this out here, right? What is the opportunity with this deal, and what is the seller's motivation? How can I increase the NOI in this deal and increase the value? How much equity am I walking into day number one? What do you think the best exit is for this deal? I don't know Dallas that well. You're the local broker there. How good of the location is this? Can you rate it on a scale of 1 to 10? What is investor demand for this property? How many offers have you gotten? Why has nobody moved on it yet? When is your call for offers? Why has the seller not accepted any? Who do you think I can get to manage this deal? And what do you think my cash flow is going to be day one based on y'all's debt quotes that y'all gotten back? By the way, with your debt quotes that you gotten back, what does that look like? Does this deal qualify for good debt based on 66% OPEX? I'd say probably not. And who do you have that can manage this property for me? I'd love to come tour it, right? These are all questions you should be asking the broker. You're gathering information and you're trying to learn about what the real opportunity is. For those of you who did get the 10-minute deal method when you signed up for this training, I'm going to be shipping these to you. You already have online access, but I'm going to be shipping these to you, and you should be using these questions here to ask the brokers all of these qualifying questions. All right. Next thing you do is you need to learn the motivation. What is going on? Why is the seller selling? What is happening here, right? Why do they want to sell? If they don't need to sell, then there's probably not going to be a deal that's going to get done. We've been working with this broker out of Houston, and every single one of their deals, they don't have a real seller, ever. There's no motivation. They have zero desire to sell, really. It's more of, yeah, if I can get this price, I'll sell it, but I don't really care, and I want, an unreasonable deal, right? You don't want to work with those brokers, and you don't want to work with those sellers. And if there is no motivation to actually sell the property, there's likely not going to be a deal that gets done, and it's probably not going to be a good deal for you if a deal does get done. Then you need to underwrite the deal, okay? You need to underwrite the deal based on all the things we mentioned: cash flow day one, how much value you can add, what your performance is built out over 5 years, can you do a cash out refi, how long do you need to hold it, etc. You need to underwrite the deal, have your management team underwrite the deal, and have the lender underwrite the deal to see if you can get good debt on it. Then you need to make an offer, keep following up, and go look for more deals. All right. And here's the thing. You're not going to be able to do this by yourself. You need a good team to be able to do these deals. For those of you in here who are saying, I don't have the resources, I don't have the credit, I don't have the capital, I don't have the experience, blah, 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 blah. You need to build a team. All right. This is not a solo sport. We don't do this by ourselves. Just like I told you at the beginning of this training, no one does this by themselves. The biggest players in the world have huge teams. They all raise capital for their deals. They all have a ton of staff. They have property management companies. They have lenders, contractors that are doing and helping them facilitate getting these deals done. And y'all need that as well. So you need to start building your team. All right. The first thing you need is real estate brokers. Like I mentioned, you need good real estate brokers who are going to bring you deals and help you get deals done. Second thing you need is investors. If you don't have the capital to buy these deals, you're going to need to go out and build a team of investors who are going to invest with you and help you get these deals done. Next, you need good lending relationships. All these brokers that you're going to be working with here, they have in-house finance teams. So if you don't have a good debt broker yet who helps you source good debt for the deals that you're looking at, the brokers have in-house finance teams at their brokerage, and they're going to be able to help you source the debt. And last but not least is you're going to need a good management company to oversee the implementation of the business plan of this deal here. Because you can buy a great deal, you can get good debt on it, but if you got a bad management company who's managing it, they can really ruin the deal. But if you're focusing on the deal requirements that I went through with you earlier, you're going to be able to get a good property manager on the deal. If you're buying in Pittsburgh, Texas, you're probably not going to be able to get a good management company. Kat hates when I bring up Pittsburgh, Texas. That's Kat's hometown. Very small city. You drive through, you blink, and you're gone, right? So locations like that don't have good management companies. Austin, Texas, Houston, Texas, Dallas, Texas. There's a lot of really great management companies to choose from. So if you have questions, write them in the chat. I'm going to bring you guys up here. I'm going to give you all an opportunity to come up here in a second live. I want to answer any questions that you do have. And make sure that you leave here with everything that you need to go out and start attacking in your local market. Before we get into that, I want to cover this one more time. This is the offer that we're making to you guys today only. Go to treuniversity.com/now. You're going to get included in this for only $397 today, $14,000 worth of stuff, but you're going to get the commercial real estate investing essentials courses. These are all the courses you get. Commercial real estate investing basics, commercial real estate, finding commercial real estate deals, what I look for in deals, analyzing commercial real estate deals, securing financing for your deals, and where to find partners and investors for your deals. We sell these courses for $10,000. You're going to get them included today. Next thing you're going to get is the Commercial Real Estate Investors Manual. I showed y'all this at the beginning. Over $50,000 worth of contracts. If you were to go out and hire an attorney to write these for you, you'd easily pay over $50,000 in attorney fees. Purchase and sale documents, multifamily leasing documents, commercial leasing documents, partnership and JV documents, and raising capital documents. We sell this for $2,500. It's included today in the $397 offer. You're going to get a ticket, a general admission ticket included. You can upgrade to the VIP if you want. But you're going to get a general admission ticket to the One Deal Away Bootcamp that we're doing in 2 weeks, October 22nd through the 25th. It's virtual. You don't have to leave anywhere. You can stay in Pennsylvania, California, New York, wherever you're at. You're going to join via Zoom. It's going to be a lot more interactive than this. It's only going to be you, me, and like 15 to 20 other people. We keep it really small. And I'm going to cover and hold your hand over 4 full days how to do the following. Find great deals, underwrite great deals, negotiating, and I'm going to help you send an offer on day number 3. And day number 4 is for VIP only. And this is an exclusive day where we look at more deals. I help you with your personal business. I help you set it up the way that you need to. We talk about raising capital, how to structure those deals, and how to go out and get these deals done. All right, $1,500 value. You get the ticket included in the offer today. Last but not least is you get the Commercial Real Estate Investing Dictionary. Underwriting formulas, return metrics and formulas, commercial real estate terms, deal terms, broker terms, investor terms. We sell this for $100. You get it included today in the offer. The Get Started Now offer, just go to treuniversity.com/now. Over $14,000 worth of stuff today for only $397. But what I want to do for the remainder of the time here, bring you guys up here. Kat, can you scroll through the chat? Tell me if I missed any questions. And we will also bring you up here to answer some questions live if you have them. I see you, Jai, with your hand raised, and we'll bring you up here first. All right, let's go ahead and bring Jai up here, Kat. Jai, talk to me. Every time I'm around you, I pick up something. What'd you pick up today? Well, look, one of the things I think you left out, one of the properties, I still can't figure it out. When it's unpriced, where should I start in it? When I already read the numbers, I know where I need to be. And sometimes I do, like I look at the portfolio, your phone again, this is a big one, and I think that they're trying to get 50 million. But I don't want to make this offer at like 30. So I want to be somewhere around at 35. Okay. I mean that would give my LPs at least 10% cash. Okay. And I do the waterfall, and I do all that now. So come on, Jai. Tell me, man, I got this, but it's like this was unpriced, and I don't want to come too low. I really think they're trying to get 50 billion. It's the Medley portfolio. All right, so this is what I would do. I mean, you know where you need to buy it in order to make it work, correct? Yeah. Okay. Well, I can make it work at 50, but I mean, my investor's gonna get that 10. Right. Well, I mean, if you're buying it at 30, you get 10. If you're buying it at 50, you're probably at like what, 3? So, you want to. I think it was like 6, and I'm like, that's promising 8. So you want to buy it where it does make sense. But here's what you do is you talk to the broker, right? You need to ask him, hey, where do I need to be at in order to get this deal done? They'll always, for deals that are unpriced, it's so stupid. I don't understand it. But they always do a whisper price. Hey, Here's your whisper price, Jai. Whisper price is X. You need to come in at X. And then just ask him. Ask the broker, like, hey, I love this deal. I want to get this deal done. Where do I need to come in at in order to get this deal done? And they'll tell you if you're working with a good broker. If you're not working with a good broker and you don't have a motivated seller, it's probably a waste of time anyways. But a motivated seller and a good broker, they'll tell you where you need to come in at, in order to be competitive on the deal.
Okay, and I noticed, man, after they said conference is short, and I think I'm telling Steve in chat, I eat broker prices. And it's like certain brokers, man, they actually want to be your partners. And your boy Matt, he just laid it out, man. But people that if you don't have any money and all these different ways of doing it creatively, I'm a creative genius at that. But how do you selling the sessions and preparing the sessions? And you didn't mention it, sir. But it was in the course. But you didn't mention it. I didn't know anything about that. So like I said, I structured. I don't know. That's all I do every day. Just sit there, I look at things, I structure it. And first I'm trying to call. And I call anytime of the day. I call on Sundays.
Yeah.
I call 2 o'clock in the morning sometimes, man.
Well, that's what you need to do, though, Jai. You just need to pick up the phone. You need to call them and ask them, hey, where do I need to be at? And they should tell you. Or if they don't tell you, say, well, I'm thinking about coming in here. What do you think at that price? And then they'll tell you. You have to be creative, like you just mentioned, about best way to pull that information out of them. But sometimes you're not going to get it. Like I mentioned, we were working with this broker in Houston, and he is a complete waste of time. His sellers aren't interested in selling. He has no information, isn't willing to share any information, and it's just a complete waste of time. So we'll never look at another deal he ever has, and we'll never take it seriously. And I'm sure no other buyers do either, because they're not interested in selling. He knows nothing about the deals. He can't share anything, and it just is a complete waste of everybody's time, right? So sometimes you're not going to get it, and you just move on.
Absolutely. So I'm gonna say I talked to the guy on the phone, and by the way, these questions I was making my own. I didn't realize they were there. You mentioned like paper. I can just write on this damn thing. I didn't write on this. I didn't write on this. Wait, I just got to listen, write on it.
That's right.
I didn't know that, but I was using this one, and I was trying to remember what documents I need. I'm like, oh wait, oh shoot, let's go right down to this. Look, I got market A. I bought like 18 of these things, so.
That's why I made them like that, so you can write on them.
Yeah, I didn't know that. She said, I was learning something.
That's right.
I got so many things. You got all these big things. So do I. Man, I ain't looking at them 32 minutes, man. I ain't looking at them. I'm one thing.
Yeah. Jai,
you said 100 doors or more.
Jai, tell everybody here who might be considering taking advantage of the Get Started Now offer how valuable the boot camp was for you for the 4 full days.
Shit, man. Game changer, man. Confidence, man. You see how I do, man. Every time I do something, man, I'm like, and it's like, okay. Actually, now I think I'm to start.
What would be your advice? What would be your advice to people who are in here right now who are trying to get started and just haven't?
Do it. I'm gonna do it again.
Come on.
I'm gonna do it again, man. Maybe you customize a little bit more with creative plans and some other ideas on it. But like I said, it's so many ways creatively, and shit, man. I can't even thank you enough, man. Just me getting on the phone. This phone was a package before I didn't have my system. Now, man, I pick up the phone. I need a broker. I need a broker for breakfast.
Well, good, Jai. Thank you for everything, and you're doing great. And I appreciate you. And that's how you accomplish that, though. You just need to be a little bit more direct with the brokers to get the information that you need. All right. All right. Who else has questions? I want to bring you up here. Anything you got? Let's hear it. Anything else in the chat? Who wants to create a team here? Write your name, phone number, and email. Tony says that. Bert is interested. Who else we got? Any other questions? All right, guys. I appreciate your time today. I hope this was helpful. There is going to be a replay of this, by the way. We'll email it out if you need to go back and watch some of the information. If you're interested in taking it to the next level and you want me to hold your hand and take you all the way through this, take advantage of the Get Started Now offer. If it doesn't, honestly, I don't know the next time we're going to run this boot camp. It might be never. It might be 6 to 12 months from now. So if you're wanting to get in on the boot camp before it either takes another 12 months to do or we never do it again, this is your opportunity. If just so you know, FYI, if you try and buy a boot camp ticket outside of this a week from now, the price is going to be double. It's a special price and it's included in here, and you don't get the bonuses as well. But if you're interested and you want to take advantage of this, get the Get Started Now offer. Come spend 4 full days with me, get all the extra resources, and let's hold your hand and take you all the way through it. And I will see you at the end of October. But I hope everybody has a good rest of your day. Thank you for taking an hour and a half, 2 hours with me this morning. My advice to you is take what we learned today, go apply it, go get on Crexi and spend the rest of the day not watching college football or whatever. Go find some deals, pick up the phones, call the brokers, run your numbers, and let's get busy and buy some more real estate. Thank you, everybody. We'll see you next time.